Right, welcome to everybody who is joining. We're just going to wait 30 seconds or so because I suppose understandably in current times there's a lot of interest in this presentation, so we'll just make sure everybody gets on and we'll be with you very shortly. Right, I think we've got a reasonable number now. So just a little bit of administration first. This presentation is being recorded, so you will get a chance to listen to it again. And I hope that you are all familiar with how to use the Q&A button to put questions into the management. They'll give their presentation and then we'll try to address them all later on. We're very pleased to welcome back Andy Thomas and Simon Walter for the presentation, and I am now going to pass over to Andy to start it off.
Andy, thank you very much indeed. And good afternoon to everyone. Thank you very much indeed for joining us. As Andy has said, I'm Andy Thomas. I'm the Chief Executive at Cohort PLC, and I'm here with Simon Walter, Cohort's Finance Director, to take you through the results for the 6-month period that ended on the 31st of October last year. By way of introduction, Cohort is a group of 7 businesses providing technology-based defence products and services to the UK and its allies around the world. Our business model aims to maximise the autonomy and independence of our businesses, consistent with good financial and regulatory governance. And that means that decisions are taken quickly and close to the customer. It maximises agility and innovation while supporting our businesses with the strong balance sheet and market reach of the wider group. So today I'll start by talking through the highlights, which you can see on the screen from the first 6 months of this financial year. Simon will then provide more detail, including a divisional breakdown. And then I'll share some thoughts on the demand picture and on our future prospects. And there'll be an opportunity, of course, for questions at the end. But in essence, it's been a robust first half. Revenue is up. We've got an order book and prospects that provide the basis to drive a strong performance in the full year and beyond. And our full year expectations remain unchanged. So as you can see here, revenue has increased to a record 128.8 million for the first half. Profit is in line with expectations. Following a record performance in the prior period, we expected a small decline in adjusted operating profit in the first half, which now sits at just under £10 million. It was another good period for new orders, and of course those are the best leading indicator for future growth. And with an order intake of £122.3 million in the first half, that's kept our order book close to April's record level and over £600 million. And as of early December, at the time of the results announcement, that covered 96% of the external revenue forecast for the year and will be generating revenue for us well into the mid-2030s. Adjusted earnings per share for the 6 months ended 31st of October decreased to 16.16 pence, and the effective tax rate was 15.5%. The operating cash outflow of 27.9 million was, as expected, reflecting a build in working capital ahead of second half deliveries, as well as payments in relation to dividends and capital expenditure. And that resulted in a net debt position as at the 31st of October of £32.5 million. The capital expenditure included a further spend of £7 million on ELAC's new facility, which was completed on time and has now been moved into. And we expect our net funds to be in line with previous expectations at the year end. We've declared an interim dividend of 5.8 pence, once again representing an increase of 10% on last year's, and that reflects the board's confidence in the group's prospects. So that's the summary. Simon will now talk you through our financial review of the first half in a bit more detail.
Thank you, Andy, and good afternoon to you all. As Andy's already said, and I reiterate, another growth in revenue for the group with contributions from our latest acquisition, EM Solutions, offsetting an expected drop in revenue at MCL. The drop at MCL, along with a mix in sensors and effectors, accounts for the marginally lower trading performance of the group, again in line with our expectations. As we indicated at the year end, we expected the revenue of UK MOD to fall back from its high level as a share of the group's overall revenue to fall below 50%. The growth in our overseas domestic and export markets will see the UK MOD activity probably remain below 50% going forward for the foreseeable future. Our expectations for the second half are much stronger, with 96% of our revenue now on order or delivered and producing a full year net margin of around 12%. Starting with sensors and effectors. Thank you, Andrew. The change in mix in this division, despite higher revenue, was the cause of the group's overall lower first half trading performance when compared with last year. We saw good order intake at Chess and a return to profitability. We expect this improvement to continue, and under new management, we are looking for Chess to drive more sustainable growth, especially on the back of demand for counter-drone systems and to achieve mid-teen net margins by 2027-28. At ELAC, the first half saw the relocation of production to the newly completed purpose-built facility in Kiel. Increased contribution from the Italy contract, which is still being prudently traded ahead of second half deliveries, has suppressed ELAC's trading margin in the first half. We're on course to deliver the first boat set on this program in the first half of 2026 calendar year, when we will review the project's contingency levels. SCA, following the sale of its transport business at the end of June, delivered less revenue. Overall net margin for SCA reduced against prior year, as lower margin work formed a greater proportion of mix in the first half, especially for a delivery to an overseas customer. This project will complete in early 26-27. The order cover for this division is 98%, and we expect a much stronger second half, delivering a net margin of around 10% for the full year. The order book of more than 2 times annual revenue gives confidence for future growth. Turning to our communications and intelligence division, it also reported increased revenue of 62.5 million, up 13%. The maiden first half contribution from EM Solutions, in line with our expectations, offset the fall in MCL's revenue from the exceptional level achieved last year. Underlying improvements of both EID and MASS further drove the higher revenue for this division. The adjusted operating profit of 10.4 million for the 6 months to the 31st of October 2025 was 23% higher, delivering an adjusted operating profit margin of 16.8%. A major factor in the improved net margin was the contribution from EM Solutions. EID's loss for the first half was less than last year's equivalent. The order book at EID continues to strengthen, and we expect significant orders in the second half from the Portuguese Navy. EID will return to profitability for the year, and our net margin target of mid-teens is likely to be achieved in the next 3 years. MASS saw good performance from its high-margin electronic warfare operational support operations, and we expect MASS to perform strongly in the second half. The division's order book increased to 203.6 million, and its revenue cover at that time was around 87%. This is typically lower than sensors and effectors, with the short-term nature of some of its work that's meant to be MCL. EID feels linked to domestic orders which are in progress. Net margin for this division is now expected to be over 17% for the full year. Finally, turning to the net funds bridge. This slide shows the factors behind the net funds movement in the period. The first half of this has been driven by 2 primary outcomes. Firstly, the expected CapEx spend on the electrical facility, which completed on time in September.
Simon, can you move a little bit closer to the microphone? I think we're just losing you a little there.
Electrical facility, which completed on time in September, and we will see the final outflows in the second half. Secondly, a return to historic trading patterns, as the first half saw significant working capital outflows, building for a marked increase in second half deliveries. As usual, the nature of our receipts and payments total around 600 million for the year, some of which can be many millions of pounds in size, makes it hard to predict in the short term. The group remains highly cash generative. Our expectations for the second half are much stronger performance, with 96% of our revenue now on order or delivered, producing a full year net margin of around 12%. Our expectations of closing net funds of around 10 to 15 million for the year end remain unchanged.
Yeah, I think maybe your microphone is just catching on your tie, Simon, or there's certainly a bit of interference, so I'm not sure where it is.
It might be a job to switch it off and switch it back on again. But anyway, thank you very much for that, Simon. And I hope that was audible. But if people do have more questions of detail, Simon will be able to tackle those in the Q&A session. So looking towards the mid and longer term, we see a number of opportunities for the group, and I wanted to take you through some of the key factors that are driving those opportunities. If we could have the next slide, please, Andy. So we continue to see a strong demand picture in response to the deteriorating security environments and ongoing conflicts that we're seeing across the world. Clearly, none of us should welcome that, and the security risks that we now see affecting the UK, amongst many other countries, are real and a matter of concern. And in regions where these threats are at their most immediate, governments are under pressure to upgrade and modernise their defence capabilities at speed. And that, of course, is where mid-tier businesses like those within the Cohort Group have got the agility and expertise to provide innovative solutions to those defence challenges. The main catalysts of demand for defence equipment continue to be the conflict in Ukraine, coupled with the rising tensions between China and its neighbours in Asia Pacific. Research from the Stockholm International Peace Research Institute shows that the biggest defence spenders last year include China at $313.7 billion and Russia at $149 billion. And the persistent geopolitical forces caused by their behaviour are causing a long-term demand for defence capability enhancements. A further catalyst to demand is the arrival of new technology, allowing artificial intelligence-enabled and autonomous systems to be integrated into defence forces. And a good example of that is the UK's recently announced Atlantic Bastion programme. And the words and actions of the current US administration significantly diluting the US commitment to NATO add a further accelerant as far as European defence spending is concerned. So what we've seen as a result of these drivers is increased defence spending in Europe and in Asia Pacific, as well, of course, as the recently announced large increase in defence spending proposed in the US. The NATO countries at the summit last year committed to raise their defence-related spending to 5% of GDP by 2035. Many European countries, particularly those in the north and east, are already increasing their defence spending significantly and looking to accelerate that target. In the UK, the government remains committed to increasing defence spending to 3.5% of GDP by 2035, with a further 1.5% of GDP on security-related investment. And we are now expecting, we don't have a date yet for it, but we're expecting the UK's Defence Investment Plan to outline how the objectives that were set out in last year's Strategic Defence Review will be funded and prioritised. And the need to increase defence spending to meet growing threats has been recognised well beyond the immediate vicinity of Russia and China. Modern conflicts demand systems that can adapt quickly and operate autonomously. The Cohort Group is well placed to meet that need and has responded with investment in research and development and in future technologies. And we continue to see the increased focus on protecting underwater infrastructure, providing opportunities for both ELAC and SEA. The need to protect our forces from both cyber and kinetic threats, including missiles and drones, are generating opportunities for MASS, CHESS and SEA. The growth in manned and unmanned submarine and surface ship programs worldwide are generating opportunities for SEA, ELAC, EM solutions and EID. The need for secure digital communications for multinational forces are driving demand for systems like EID's TDCIS and MASS's JEFNet. And the need for electronic warfare, drones, counter-drone and communications for the UK and its allies is driving demand for MCL's products as well. The practical result of these geopolitical developments is a sustained higher level of demand for our equipment and services. And to share some examples of the kind of opportunities we're seeing, EID is focused on providing communication and network systems for new Portuguese Navy vessels, as well as multiple communication systems opportunities from NATO and Asia-Pacific customers, and we expect to see some significant order intake there this year. EM Solutions is also pursuing opportunities with the Portuguese Navy, alongside potential fleet installations for New Zealand and the remainder of the Australian fleet that it isn't providing already. Their installation on the Japanese Maritime Defence Force trials is ongoing, and they're working with the British Royal Navy on SATCOM renewals as well. And at MASS, as the focus on cyber security increases, MASS has seen an increase in training and electronic warfare exercises for the UK, as well as coalition defence customers too. And at MCL, well, they continue to work as a trusted partner to the UK MOD, and we're seeing some potentially significant orders there for electronic warfare and, in the short term, for uncrewed systems as well. In our Sensors and Effectors division, Chess is seeing a steady and an increasing demand for their ground-based drone defence systems. ELAC Sonar continues to support the Italian Navy programme, is also looking at new programmes in NATO countries and in Asia as well. And finally, at SEA, we're seeing significant growth in opportunities and indeed orders for our Crate Sense and Crate Array towed array sonar systems. Now, these are all prospects rather than orders, and value and timing are both uncertain, and the probability of win varies. But what I've hoped to try and do here is to paint a picture of the strong demand and opportunity picture that we see for the group. So, moving on, as the group has developed, our international presence has also widened. And that global expansion reflects our commitments to being closer to our customers and to developing defence technology solutions that will be able to support their future needs with local support as well. And in earlier presentations, if you've seen us present before, you'll have heard updates on ELAC's new facility in Kiel in Germany. And I'm very pleased to confirm that following our £21 million investment and a lot of hard work from the team at ELAC, that facility is now fully operational. And we look forward to sharing more details of that during the official launch, which will take place later this year. The Italian Navy submarine programme continues to be a very important focus for ELAC's team, and opening an office in La Spezia in Italy has been a key step in strengthening our support for the Italian Navy, enabling closer collaboration, faster response times, and sustained local value for this important customer. And I was present, as you can see in the picture there, at the launch event, and the enthusiasm from the Italian Navy for ELAC's contribution to their submarine capability was absolutely unmistakable. And then finally on this slide, SEA has also expanded its geographical footprint with the opening of a state-of-the-art manufacturing site in Ottawa in Canada. And our vision is that this new facility will be the main manufacturing site for SEA's torpedo launcher systems, initially for our customer in Canada, but eventually for customers worldwide. And as well as delivering profitable revenue, these strategic investments support our business development activities in important international programs, and thereby our long-term growth. Now, another interesting example of our global expansion is the Memorandum of Understanding that I signed with the major Korean shipbuilder Hanwha Ocean at the Defence and Security Exhibition in Thailand last November. And that agreement signals our ambition, together with Hanwha, jointly to deliver defence technologies to address the needs and requirements of the Royal Thai Navy's second phase frigate acquisition programme. And that memorandum of understanding will provide opportunities for businesses across the group to come together and provide a package of defence technology solutions that could include sonar systems, torpedo launcher systems, and communications management as well. And the agreement is a key milestone in our growing relationship with Hanwha Ocean and an important step in strengthening Cohort's international partnerships. By combining the expertise and technology from across the Cohort group with Hanwha Oceans, we can deliver together naval platforms that enhance operational effectiveness and, through our unique modular and open architecture design, future-proof vessels to support long-term capability and security. And we're excited to be exploring new opportunities alongside Hanwha Ocean, as well as delivering the Cohort group's market-leading maritime capabilities to the Royal Thai Navy. Now, in January this year, January last year, I should say, we acquired Australian satellite communications specialist EM Solutions, expanding our naval defence offering and reinforcing the group's presence in Australia. And led by their joint managing directors, Yorgos Makris and John Logan, EM Solutions are developers of innovative naval satellite terminals that help to deliver high-speed telecommunications across the world. And EM Solutions is now fully integrated as the group's seventh business. Their unique capabilities have enabled us to access the expanding satellite communications market. And they've also strengthened our performance in the first half, making the largest contribution, in fact, to group profit of all of our businesses, as well as generating Australian dollar 28.6 million of order intake. Now, EM Solutions sees much more opportunity ahead in the coming months. Their team made an important contribution, as you can see in the picture there, to Cohort's presence at the large DSEI Defence Exhibition in London in September last year. And that was an important event for their long-term prospects in Europe, Australia and Japan. And it also provided an excellent opportunity to discuss partnering with EID in the provision of satellite communications terminals to Portugal. Overall, it's been a very encouraging start for EM Solutions as part of the group. And they'll continue to work with our other businesses to gather intelligence on opportunities to promote their Cobra family of satellite communication terminals. So I've explained something about the key factors that are driving demand for our defence technology products and services. And this slide shows quantitatively how that demand is translating into orders for the group. As I said at the beginning, the group's order intake was 122.3 million, delivering a closing order book of over 600 million, just below, in fact, the year-end record of 616 million. And our on-contract revenue stretches out to the mid-2030s, with particularly good order intake from MASS and EM Solutions within communications and intelligence, and CHESS and SEA in sensors and effectors. And our full-year expectations for order intake remain unchanged. And we continue to see a positive outlook for organic growth in the medium term, underpinned by that healthy demand in our core defence markets. Now that brings me to the end of our presentation, and I wanted to finish with a summary of the main points that we've presented to you. So it's been another strong interim results period for the Cohort Group. In part, that reflects the growing demand picture. And importantly, though, it's also a result of the agility and innovation that our business model is designed to optimize, and our experienced and entrepreneurial leaders. We have an active acquisition strategy and look for businesses that will complement our product portfolio and provide opportunities to enter new markets or to strengthen relationships with our existing customers. And the contribution of EM Solutions in this latest results round is a good demonstration of how this strategy works out in practice. Our financial strength and public listing underpin customer confidence and enable future investment in acquisitions and product development. And finally, we've sustained our strong order book, and looking forward, we have an exciting pipeline of further opportunities ahead. And as a result of that performance and our prospects, the board has felt confident to increase the dividend once again by 10%. And before closing, and in these presentations, I always want to take the opportunity to mention the great contribution to our success that's made by our management teams and employees. In the first half, we welcomed some new members to our leadership team. Andy Smith took over as Managing Director at Chess, following a successful career to date at Leonardo and at Marshalls. And Michael Flowers and Clint Thomas joined us as non-executive directors at EM Solutions, and we look forward to working with them to build on the success of the group. Within our subsidiaries, our reputation as a leading mid-tier defence technology group continues to attract new talent, and it's the expertise, dynamism, practicality and integrity of our people that will help secure future business success. We believe that the strategy for organic and acquisitive growth that we've adopted will offer our investors high quality, long-term returns, and we'll aim to do that while creating employment opportunities, driving innovation and enhancing the security of the UK and its allies. Thank you very much indeed for your attention. If you have questions, we'll now be delighted to try and answer.
Great, thank you, gentlemen. Very, very clear. I hope you're back with us, Simon, vocally.
Can you hear me okay?
Yeah, that's much better. But lovely, thank you. Right, lots of questions, so we shall dive straight in. Undersea communications infrastructure, a lot of publicity for it lately, and you mentioned it specifically as opportunities for ELAC and SEA. Can you elaborate a little bit further of how those subsidiaries might address the threat to the UK?
Yeah. So SEA is heavily involved in Atlantic Bastion, which is a UK program for monitoring underwater activity in the North Atlantic, which is examining a number of different concepts. And we believe that the Crate sensor is going to be extremely valuable in that because it's low power, lightweight, very sensitive, very good at detecting underwater threats, and is ideally suited to working with uncrewed vessels. So we're teamed with the European artificial intelligence specialist Helsing, working on a concept that could bring that to life. And ELAC is developing, or has in fact developed, some specific products aimed at combating the threat to underwater infrastructure. A product called Enlightor is designed to provide long-term surveillance of underwater infrastructure. And of course, by that I mean things like underwater gas pipelines, oil pipelines, internet cables and power cables, and detect any oncoming threat. And watch this space for news about what we might be able to do to physically combat those threats as well. So we've got some really interesting work going on in that area, Andy.
Great, good to hear. EM Solutions looks to have been a great acquisition, and you mentioned the strong order book. Is it too soon to claim that some of that order book would not have been won without them being part of the Cohort group? Or are those benefits further down the road?
That's a very difficult question to answer. I suppose I should say, yes, we were responsible for it all. But actually, they're a great business, and they've got some very strong relationships. And whereas I'm sure that we are assisting in those territories where we've got a strong presence, particularly Portugal and the United Kingdom, it's their excellent products and technology which have won those orders.
Okay, a couple of questions on Chess. Can you sort of first remind some of the newer parties on this call what were the challenges that Chess has faced in the last year or so? And then secondly, can you update on progress even since the interims and explain what are the drivers for the return to profitability or return to higher margins?
Yeah, sure. So Chess has got some really great products and some really great engineers, and it's that has won it really an awful lot of work. In particular, we're providing the optical tracking elements of Rheinmetall's ground-based air defence systems, which are of considerable importance to European security. They're being acquired in very substantial numbers, and as you can imagine, being used actively at the moment, given the situation in Central and Eastern Europe. The issue has not been at all with the quality or pricing of those products, which has been very, very good. But they've been undergoing a transition really from an engineering-centered business to one which also needs actively to manage volume production. Driven really by the strong demand patterns that we're seeing at the moment, and that's proved to be a challenge. Simon and I did our best to support Chess through that transition period, but ultimately we came to the view last year that we needed a change at the top of management. So we brought in a new managing director in October, very experienced guy. I mentioned Andy Smith, initially from Marshalls, but also with a long experience at Leonardo. With very, very strong capability in the area of managing effectively high quality production in defence at volume. And we're already seeing some improvements. Definitely, production has become more predictable, and that's had a good impact on the relationship with our key customers. We've since then, Chess is now experiencing a certain degree of tightness in its supply chain as well, which we'll have to deal with. But I don't expect that to have a material impact on the results this year at Chess. We've got the right people on board to manage that sort of thing. So getting control of that supply chain and really putting in good practice into supply chain management, because that's critical for Chess. Managing the stocking and assembly and quality management of production are going to be critical. And I'm convinced that we've got the right team in place to do that now.
Great. Now, Simon, maybe one for you. There's a couple of questions relating to potential delay on programs or projects, and you've got a very healthy 96% revenue cover at the moment. Is that a conservative level that might take account for some of those slipping into the next financial year?
Well, the 96% was as of last December when we announced these results, so mid-December. So we've had a month literally since then, and things have obviously progressed. And the infill, the 4%, is not my concern really for the year end. It's more all about delivery. It really is about delivery across the group. So no, I've got no concerns there. Clearly, what we're winning now, much of it will be filling up next year and the years beyond. So no, the 4% is not a concern. It's really now about the businesses turning that order book into revenue in the coming months.
Okay, and a related factor, looking at the Italian submarine contract, you mentioned that the contract has got about £10 million of provisions on your balance sheet. Can you talk through the milestones or the timeline for some of these provisions to be released and unwound?
Well, hopefully they will be. They're there obviously in case we do need them. Where we're at the moment is in what's called the factory acceptance testing, which is a suite of tests taking place. They've started already and will carry on into the early summer of this calendar year. Once we're through those full complete factory acceptance tests for boat set 1, we certainly will then look at some of the contingency. But the key steps, there's 2 further key steps, which is the harbour acceptance trial, and most important of all is the sea acceptance trial, when the submarine goes to sea with all of its crew on and all of its kit working. Clearly, the earlier tests try and ensure that the what we call the SAT issues, the sea acceptance test issues, are minimised. Once we're through boat set 1, really it should be simply then a matter of production for boat sets 2, 3 and 4. So we certainly see some of this contingency either being utilised or released over the coming couple of years as we make our way through these programmes in stages.
Very clear. And perhaps another one for you, well, definitely another one for you, Simon. The reader, the viewer, believes that you're currently in discussions to renew and expand the revolving credit facility. If you can comment publicly, how is that going at the moment?
Well, yes, we started. I had some discussions before Christmas. I've actually come off a call this morning with another potential provider. The facility in place is 50 million, with our existing three banks, and that's been in place really for about the last 10 years. All I can say is that the group, obviously over those 10 years, the revenue has certainly almost tripled. The group is much larger. Obviously, we now have an Australian business. So the size of the facility is going to be, somewhat to at least twice as big as what it is now, probably 2 or 3 times as large. We will be adding an Australian bank into the banking group alongside the 3 existing providers. I suspect there will be 2 or 3 others that may join. And I have to say the demand I've seen from banks, the appetite for defence stocks and the debt positions is a sea change from what we would have seen 5 years ago. An absolute sea change. Banks that did not do defence are now queuing up to see me. So I think I'm probably going to end up seeing around about 12 to 15 new banks over the next few weeks through discussions, all of whom are interested. So that tells you that the appetite is out there.
Good to hear. Well, bad to hear and good to hear, but with Cohort, would be very good news.
Yeah.
Right. Couple of questions about M&A. Selective M&A has been very much a successful part of Cohort's growth. The question is, in the current very positive environment for trading at defence stocks, presumably the rating multiples that possible vendors are seeking have increased materially, and will this put you off in the short term?
Well, let me take that one. I think we look at the Rheinmetalls and Saabs and large European defence players and look at the ratings that they've got on public markets. Those do not necessarily translate down to the area that we're interested in, where we're talking about businesses with typically earnings before interest tax in the range of some £5 to £10 million annually. Really, the multiples that we're prepared to pay depends very strongly on the quality of the individual business. So if we see a business that's got a strong order book and a verifiable and strong pipeline of future opportunities, we're going to pay more for that than one that doesn't have one, simply because it's going to grow more in the coming years. And that calculus really hasn't changed. I suppose one thing that we have seen over the past year is we've seen some financial buyers coming in with heavily leveraged, and as a result, very generous bids. And when that happens, it happens. Good luck to them. But the businesses that we see, there are many good reasons to choose us as an acquirer. I mean, reputation is one. We look after businesses and we grow them, and we can be very flexible in the structures that we offer as far as acquisition is concerned. So no, I don't see there being insuperable barriers. The issue is more finding ones that will really work for us. We get a lot coming through, but really only a small proportion of those we really think are worth pursuing.
Yeah, that explains the strategy very well. And following on, there's a question, in a perfect world, and I'm afraid we're definitely not in one of those, which subsidiaries or which geographies would you most like to increase group exposure to via a suitable deal?
What we look for in our potential new subsidiaries, if we want to add businesses to our portfolio, are a combination of access to growth, so parts of the market that are growing, uncrewed systems, autonomy, for example, others too, and also some kind of sustainable competitive advantage. So we're not just competing with peers on the basis of who's prepared to accept the lowest margin. I think there are quite a few of those. In fact, we've just brought on board an experienced new strategy person who's taking a proactive look across the market, trying to identify a few of those little niches that we might explore and look at perhaps taking some proactive action. I mean, there are some areas, for example, drone manufacture, where you see certainly large demand and potentially large sustained demand in a conflict situation, but where barriers to entry are really very low, and where it's not going to be easy to sustain a high margin, given that there are so many competitors that could do what you could do. In some other areas, we see new technical developments making possible new opportunities that simply weren't there before. I mean, artificial intelligence is one of those areas, and by teaming with some artificial intelligence players, I think we've opened up some interesting market opportunities. Space is another area where the significant reduction in launch costs for low Earth orbit satellites has enabled new players to come in with new technology ideas which might not have been feasible before. So we'll see how things pan out, but I think there are a number of really interesting technology areas.
Great, and you've mentioned Andy Smith a couple of times, and as well as his appointment at Chess, also some very senior advisors helping with EMS. What do you think has most attracted people of this experience and standing to join Cohort?
Well, we can offer really exciting careers to people. The businesses that we run operate, as I said right at the beginning, with a high degree of autonomy, and that means that the right leadership team really gets to experience the fruits and results of their decision making and their leadership. And for good people, that's a really exciting opportunity. Of course, not so good people prefer to rely on a complex web of reporting chains that they can hide behind. But for the kind of people that we want, then that's a really great opportunity, and it carries an awful lot of excitement and challenge with it. And of course, it's rewarded appropriately as well. So we've always found that whenever one of our senior leadership positions in the subsidiaries comes up, we get a very high level of interest from very high quality candidates. Talking about our non-executives in Australia, I mean, we felt it was very important to get some local, really experienced support for our executives there, because it's not so easy to mentor and work closely with from 10,000 miles away. So Michael, some of you who may know the business Chemring, was formerly the CEO of Chemring before Mick Ord took over. He's a very experienced Australian businessman and an ex-army man as well, so very experienced in the defence world. And Clint Thomas, our other non-executive director, is a distinguished retired admiral from the Royal Australian Navy, who was also the managing director of Serco's business in Australia as well. So two very talented, experienced.
But not just precious metals, but basic ones, including copper and also rare earths that have many technological uses. Do you fear any impact on your production costs yet? And do you take the precaution of stockpiling any critical raw materials?
I think Andy can answer some of this with me. I think we don't generally stockpile things like raw materials and rare earth metals and things like that. There clearly have been some challenges. We're seeing it at Chess a bit. Generally with pricing, we protect ourselves. Obviously, we agree fixed prices with our supply chain, and obviously anything that's a key element, which may involve some of these parts, would be fixed in advance of the contract being signed. And then we would obviously have no exposure. We also have, in longer contracts where you may not be able to do that, we'll have indices clauses built into the contract to give us some protection against inflation. And finally, we obviously have contingency to deal with some of these risks. I mean, the real key for us, I haven't seen issues particularly, Andy, in the pricing side of it. It's probably more in the actual supply side. It's actually getting your hand on the bits. And I think, Andy, you may want to say something there.
Yeah, I think, the commodity prices don't have a direct impact because they make up a very small part of our overall cost base. And we aim to keep our supply chains as local as possible as well, relying on good general engineering partners, contract electronics manufacturers, and so on in the localities of our businesses, to keep supply chains tight, close, and to ensure maximum resilience and reliability. Some things are inevitably going to be exposed to those global tightnesses. I mean, we saw that with high performance semiconductor chips in the aftermath of COVID. And as I mentioned earlier, we saw a little bit with permanent magnet motors, which formed part of Chess's equipment more recently. So yeah, I think we do need to look at those areas. And one important matter that Chess is going to be addressing is now as it moves into higher volume production and more extended production, maintaining some stocking, not necessarily at Chess, but throughout the supply chain, to ensure a high degree of resilience to economic or supply shocks of one kind or another.
Right, now, a question specifically for the UK. There was a noticeable slowdown in UK defence ordering last year as parties awaited the Strategic Defence Review. Is there a risk of, or are you seeing further delays as people now await for the Defence Investment Plan that was expected to have been out of the way by the end of 2025?
Yeah, it was, yeah. Well, I mean, I thought the Strategic Defence Review was a really good piece of work for the UK. I mean, it was very clear, very articulate, and I think it was very well argued as well, written by some real experts. And that gave me a lot of confidence for the future of UK defence, coupled as it was to the announcements in long-term increases in defence expenditure. And it's been very disappointing that that hasn't so far been translated into action. And I think we've seen a very tight spending position in the UK generally. We've seen some self-inflicted wounds, like the Ajax programme that people may be familiar with in the UK MOD. But we're waiting with a lot of interest really to see this Defence Investment Plan, because that will help us focus our own investments and priorities for the future as well in the UK. But what I would say is that whereas we haven't seen that step change in defence spending in the UK, in non-US NATO more generally, in 2024, which is the last year, we've got figures for defence spending, actual spending, not politicians talking about it, went up 19%. And if you look over to the east, Japanese spending went up 21% in that period. So these are real increases in spending, and reflected in the large growth that we saw last year in our revenue and profit. UK for the first time is significantly under half of our revenue in the first half this year.
Right, and given current events, it would be surprised not to have questions about across the other side of the Atlantic. And we have one which is caveated that nobody has a crystal ball, but do you, with your great experience, think that Trump's direct involvement in Venezuela has indeed increased the chances of China risking a similar move with Taiwan?
Well, I'd caveat any comments with this that I am not a diplomat and I'm not a foreign policy specialist. But it is clear that by acting unilaterally and without a clear legal cover in invading a neighbour, the rules-based order where that sort of thing wasn't supposed to happen has been undermined to a certain extent. And it does give a certain degree of diplomatic license for China potentially to interfere in Taiwan. And could even be certainly in debating terms and diplomatic terms used as a certain degree of cover by Vladimir Putin in Ukraine. So to that extent, it is regrettable. On the other hand, I don't think many people are likely to regret the departure of Maduro.
No, very true. Back to a couple of specifics. Can you give a little more detail about the program that Chess has working with Rheinmetall, and indicate how much revenue per Sky Ranger system and how many Sky Ranger systems you might expect to be selling in coming years?
Yes, as I mentioned, we provide the optical tracking systems and the multi-sensor tracking systems, which are actually fundamental to that system, absolutely vital part of it in providing precise location information about the drone for the weapon to take on. But Simon, would you like to say a word or two about expected order flows and value?
Yes. Where we're at is, to date, we've had in total, and there are a number of variants of the system, we've had 173 systems ordered by Rheinmetall for chess. We've been recently agreeing prices going forward. We tend to be fairly sensitive about prices because of commercial reasons and various things, but I can basically guide that each system is worth somewhere over £200,000 to us in revenue terms, a bit north of that. And looking forward, these are numbers that are available from Rheinmetall. They're looking at potentially orders of up above potentially 1,600 systems for the Sky Ranger across a number of markets. These are the sort of numbers they're talking about. They have not placed orders with us yet for those quantums, but we will see. But there is significant demand, and some territories in Europe are looking at many hundreds of these systems potentially. I think Germany is probably the largest potential buyer of these systems.
Yeah, that's very helpful. And similar question about Crate Array, where there was a recent large contract with Liquid Robotics. And again, if you can just talk a little bit more about the potential size of the market and what you might hope to take of that over time.
Shall I comment on that? I think the answer is that we see quite a few varied uses for the Crate. Its most sophisticated form, it provides a complete anti-submarine warfare system for light manned vessels or larger uncrewed vessels, complete with a full software suite and providing the ability with an operator to locate and track submarines. And that's quite a high value system. And then in its most basic form, it's simply the array itself, which can be coupled to artificial intelligence and uncrewed vessels, typically as part of a multi-sensor system to operate over a wide area to localize and track submarines. And I can confirm that this system has been used operationally and successfully for tracking hostile submarines by at least one of our export customers. We see it's hard to be precise about numbers, but if, for example, we're selected, that's the sensor is selected for Atlantic Bastion, we would see that opportunity alone driving demand for hundreds of the basic sensors. And we also see, as our first successful implementation of the sophisticated full submarine tracking system, we see more demand for that as well, and that's a pretty high value system.
Great. Now we've got time just, I think, for a couple more questions. If I do hear about prime contractors, the larger groups in defence. First one is it different working with a newer business like Helsing compared to established primes?
Well, yes, of course. The culture is very different, especially compared to the large primes. Personally, I think as a group, we welcome the arrival of some of these newer software-driven businesses with some new thinking into defence. I think it's got the potential to unlock some very interesting new capabilities. And it's going to be most successful where they work hand in hand with businesses like ours. Ideally, sort of businesses like ours that are agile and innovative and able to bring technology into fruition, into use. And also because we understand the way that our customers work and the way that the end users need to use the product, and we bring that to them as well. So I see that cooperation as being potentially a very valuable thing. Not only just for us, but also for defence more widely.
You've kindly answered the next question on primes, which is how do you so successfully compete against them? And the answer is that you are doing different things in different areas in your own high quality way.
Well, we work with all of the primes as customers. and indeed in some cases as suppliers as well. So they're not just competitors. And I don't pretend that we would be a good choice to make the next nuclear submarine for the United Kingdom. I mean, we simply don't have the resource in terms of numbers of engineers or the processes that are required to actually have them all running in lockstep to produce that incredibly complicated system, while meeting all of the demands of safety, functionality, speed, lethality, emissions, all of the many things that they have to achieve. But what we can do much better than what they can do is put those systems that make it effective, the communication system for surface ships, missile defense systems, torpedo launch systems, sensor systems, intelligence gathering systems. And we can do that because the processes that are used by those primes to manage those vast engineering projects would simply strangle and add cost to those small but innovative systems where you've got to move fast.
Well, we've talked a lot about the success of Cohort, and we have a question that there was a short period of decline in the share price at the end of last year after what has been a spectacular run, and the question was, simply there had been public notifications of the directors, top slicing some of their positions, which seems unlikely to have impacted the share price. Do you happen to know of any other reasons why the shares ended the year with a brief downtick?
Well, yeah, we had. I mean, I don't have the full details of this yet myself, but the answer is that we had an institutional seller made a strategic decision to depart, and did so perhaps not in the most orderly way imaginable. So we had downward pressure on the share price, really from that seller coming out with successive sell orders over an extended period until they succeeded in selling the remainder at the end of their stock. And at that point, we've seen the situation turn around and the share price is in positive territory again. So, I mean, these are the technical factors that affect shares. I mean, it's relevant that in that period, I don't think we had a single RNS announcement of any sort of significance. So it wasn't stuff that we were putting out, and it wasn't market gossip that I'm aware of anyway. It was simply that technical factor of more sellers than buyers.
Just last question, crystal ball again. Well, not quite crystal ball. We've had an inquiry. If the Ukraine war was to be settled in the next few weeks or months, would that have any material effect or any effect at all in your future revenue confidence?
The answer to the question is no. The reason for that, I mean, we did actually see in 24-25 a material impact from Ukraine with our business MCL, which had a record year that year, for various reasons of UK strategy and approach. I mean, a different approach has been taken to supporting Ukraine, and so we've seen that, although it's not disappeared, it's significantly fallen off this year. So we actually have very little impact of Ukraine directly in what we're doing at the moment. But if you're thinking more widely about the question, well, if the conflict in Ukraine stops, everyone can stop worrying and we can go back to not spending all this money on defence anymore. I really don't think that. I think that Rubicon has been passed, I'm afraid, and it's very clear that Vladimir Putin has got wider objectives than just Ukraine. I mean, that's apparent from the hybrid warfare that Russia is carrying out against countries like Poland at the moment. I don't know if anyone heard the interview on Radio 4 with the Polish PM this morning. But essentially, and I wish it would, because it's continuing to cause terrible loss of life, the Ukrainian conflict came to an end in a matter of weeks. What we would see would be a highly contested border in the centre of Ukraine, with a build-up of forces on both sides, as Russia continue to build up its capability with the aim of having another go, and on our side, the need to build up in order to deter that. So that coupled with the fact that Russia's economy is on a war footing of a tremendous nature, and it would be tremendously economically a challenge for it to actually stop that now, I think means that we're in a period of structural and unavoidable tension, which is going to be very difficult to get out of.
Yep, sober but very, very accurate assessment, I'm afraid. Great. Well, I think that's all we have time for. I'd like to thank the audience for their attention and a very wide range of interesting questions. Sorry we haven't quite got through all of them. We'll try and do that later on. There are one or two about forecasts and estimates, which obviously the company can't look forward. But if you do go to the Equity Development website, you'll see our latest note that followed the interims and quite a lot of other coverage, which also covers, of course, forecasting and valuation. The audience will get questionnaires about the event, and Andy and Simon and the rest of us would be delighted if you can put in a little time to share your thoughts on that. And last but not least, thank you very much to Andy and Simon for a very, very clear presentation and addressing lots of questions. And we wish you all the best for a good second half and ongoing success.
Thank you, Andy.
Thank you, Andy. Thank you all.